Everyone at some point asks the following question: how much money do I need saved up before I buy my first home? And most people are shocked by the answer because it's not just the down payment. Hello, Chris McAndrew here. My wife Heather and I run the McAndrew Team with Keller Williams Realty Atlanta Partners. We love helping people buy and sell homes throughout Northeast Georgia. So, how much do you need saved up to buy a house? Expense number one is, of course, the down payment. This is the one everyone knows, but it's also the most misunderstood. You do not always need 20% down. For many years, I thought you did. It's what my parents put down on their house, and I just figured I would need that much saved up as well. But boy, was I wrong. Here are some common options to allow you to avoid paying 20% down. The first couple are the VA and USDA loans, which both offer 0% down options. Now, these are not available to all sellers. We'll talk about that in another video. Next, you got the conventional loan, which can be as low as 3%. A little bit shocking there because you always think of the 20% with that one. Next, you have FHA loans, and they can be 3.5%. And of course, there's always the one we just talked about, the 20% down option, which allows you to avoid paying the FHA's monthly mortgage insurance premium or the conventional loan's private mortgage insurance. We'll talk about those in another video as well. So let's look at an example here of a $300,000 house. So let's say you're going to put 3% down. That would be $9,000. 5% down would be $15,000, or the full 20% down option would be $60,000. And you see there's a big difference there in those numbers. $9,000 on the lowest option all the way up to $60,000 on the highest. Now, most of us as first-time home buyers do not have anywhere close to that kind of money, 20% for a house saved in our bank accounts or hiding under the cushions. And that's perfectly fine. You can still purchase a house. But there are some other expenses. So let's move on to expense number two, which is closing cost. This is where buyers can get caught off guard. Closing costs usually run about 3 to 4% of the total purchase price. Now, this includes things like lender fees, you got appraisals, you got title and attorney fees, prepaid taxes, and insurance. So on that same $300,000 home example we've been talking about, closing costs might run you anywhere from $9,000 all the way on up to about $12,000. Now, the good news about these costs is that sometimes sellers may pay part of this or even most of it, but you should never count on it, and you should get a great real estate agent to help you negotiate that sort of stuff. Let's move on to expense number three, which is inspections and upfront cost. Before you even get the keys, you'll likely pay for a home inspection, possibly a radon, some kind of termite inspection, or a septic tank inspection. This usually adds up to about $500 to $1,000, if I could write this right, $1,000. That money is paid early, and it is not refundable. Expense number four is the Life Happens Fund. This is the part some people like to ignore. But when you buy a house, something will eventually break. You will eventually want new furniture, and unexpected expenses will eventually pop up. At a minimum, you should have 2 to 3 months saved up worth of expenses. This is not part of your down payment. This is your safety net. So, how much should you actually have saved? Let's put it all together using a realistic example. On a $300,000 home with 3 to 5% down, you're going to need down payment $9,000 to $15,000. You're going to have closing cost that can run you $9,000 to $12,000. Inspections $500 to $1,000, and then of course you want your emergency fund, and we'll put say $5,000 to $10,000 into that emergency fund. So the total savings target for that $300,000 house would be anywhere from $23,000 to $35,000. Could it be less than this? Yes. Could it be more? Of course it could. But this is a solid and realistic range for a $300,000 house. Now, for a few quick warnings. Don't drain your savings to zero. Don't assume the seller will cover a bunch of these costs. And don't forget about moving costs, utilities, and repairs. Buying a home should feel exciting, not terrifying. You don't need to be rich to buy your first home. You just need to be prepared. The right loan, the right plan, and the right expectations make all the difference. If you're thinking about buying and want a personalized breakdown based on your income, credit, and goals, reach out. My wife and I would be happy to help you plan it all out. Our information can be found right down there below this video. If you learned something from this video, like it and share it with someone who could benefit from this information. And subscribe to stay up to date with the world of real estate. And remember, your dream home is out there. Let's go find it.